I'm not sure if you have noticed, but in the last year alone, we had that many superannuation funds mergers that I can no longer follow who is who and who merged with whom. There are new superannuation fund names appearing and the old long-standing funds disappearing, and lots of members are worried, thinking, is that a good or a bad thing for my fund, for my retirement and for my future? And those are very legitimate questions that you should be asking, trying to understand why there is a merger. Is the move beneficial for you and why? And what course of action, if any, you should take to ensure your long-term benefit is protected. My name is Katherine Isbrandt from About Retirement. I'm certified financial planner and you are watching About Retirement TV, the place that I've created with the idea to assist Australians preparing for retirement or those who have already retired to improve their financial position, investments, income, government benefits, so you can enjoy a peaceful and financially successful retirement for life. And today I want to answer the question that I keep receiving. Why are superannuation funds merging? And what impact do those mergers have on my bottom line? So let's start with those basic questions first. Why are superannuation funds merging? As explained in my video 8 Changes to Super, in 2021-22 financial year, our government has introduced many changes to our superannuation system that also includes many changes to super funds that all trustees need to follow. For example, the best financial interest duty test or introduction of naming and shaming of superannuation funds that would not have met annual performance test. This high degree of pressure, together with scrutiny of fees charged by super funds, introduced the situation where some smaller funds decided to merge with bigger funds, or bigger funds find an advantage and want to swallow smaller superannuation funds once they have a chance to improve their market share. Therefore, you could say that this recently passed Your Future, Your Super legislation, together with APRA's performance test, forced number of superannuation funds rethink their ability to continue the business while providing a benefit to their members. So we have already witnessed number of superannuation funds mergers. Australian Super has already swallowed Club Plus and LUCRF. CBUS combined with Media Super. Equip Super together with Catholic Super. First State together with Vic Super and WA Super. And they rebranded as Aware Superannuation Fund. Hostplus together with Intrust and Statewide. We have witnessed a new superannuation fund, Brighter Super, to appear from merger of LGIA Superannuation and Energy Super. Then we have probably the biggest merger, Sun Super together with Q Super, that rebranded as Australian Retirement Trust. And Taskplan together with MTAA that rebranded as Spirit Super. There are still a number of superannuation mergers that are continuing. For example, Active Super and Vision Super, Brighter Super together with Suncorp Portfolio Services, Christian Superannuation together with Australian Ethical, Hester and Mercy Super, Hostplus and Maritime Superannuation, Mercer Super together with B2 Superannuation and Leithram Super, Uni Super and Australian Catholic Superannuation Fund. As a member of either a smaller joining fund or the bigger fund that acquires a smaller fund, you should really start paying attention how much a merger impacts you and your long-term benefit, and not just simply accept the marketing spiel that superannuation funds keep feeding you. Therefore, things you should check before accepting a new fund are: number one, fees; number two, available investments and performance; number three, insurance provided; and number four, other services such as, for example, advice. So let's go over each of those points in a little bit more details. Number one, fees. Fees are most likely just about the only thing that you can actually control within the fund. The lower the fee charged, the more money stays in your fund, the higher the balance that can be invested. In theory, the more you save on fees, the more you should stay in a fund and be available for you for your retirement. Therefore, reduction of ongoing fees is important and beneficial for the long-term outcome of your superannuation balance. So it only makes sense to check if by joining a new fund you will actually benefit from the change and those fees will not increase due to the compulsory merger. If you are not sure how to assess your superannuation fund's fees, please watch Fees You Pay in Your Super. This video will explain different types of fees charged by different types of superannuation funds. Number two, available investments and performance. Investment choice is greatly underestimated by many investors who tend to accept the default options, which does not need to be the most suited options for your needs or for your risk profile. But when funds are merging, you need to check if the investment portfolio you are in will continue to be available. And if not, which options you would be transferred to and what choices are available to you within a new fund. At the end of the day, the long-term investment returns are the most important ingredient in achieving the satisfactory retirement balance in your super. Number three, insurance provided. You might not appreciate the importance of insurance in your super, but keeping your insurance intact during and post a merger should be your goal. You should inquire if there is going to be an increase in a premium charge or decrease in a benefit provided or any other rules that could impact the insurance cover that you have. As a general rule, you as a member should not suffer any insurance cover loss due to the merger, but it is essential that you double check if this is really going to be the case. And number four, other services, such as, for example, providing advice. Some advice is better than no advice. Therefore, if your superannuation fund can provide you with some even basic information about superannuation as your long-term investment, that should only be benefit to you. Please don't expect your superannuation fund to provide you as a member with the full financial advice for free. Also, this advice is not going to be independent or impartial, purely because it is in a super fund's interest that you stay with them and not move to another fund. Super funds are limited to a general advice of the actual fund and some basic superannuation rules. Some super funds do employ their own financial planning team, but it is not a free service, and most certainly the advice is far from being independent. Nothing will replace a true unbiased advice you receive from a licensed financial planner that is not aligned with any financial institution. But as I said before, the basic superannuation fund advice might be just a very good start for you. So what is the bottom line for you as an investor? Well, those mergers are now a fact of life. They will be happening whether you like it or not, whether you approve or not. So it is your job to assess if the merger is to your benefit or your detriment. If unsure, speak to a financial planner that does not work for either of the superannuation companies to give you a true picture of the merger outcome. I do hope we will not end up in the same situation as in banking, Big Four and few little companies in superannuation space. I have always been a believer that competition is healthy and beneficial for consumers. If we ever end up with Big Four super funds due to ongoing mergers, there is no point of reference. The competition is gone, and we might as well forget about trying to achieve better retirement outcomes, as it would be completely out of your control. But as for now, we do have far too many superannuation funds in Australia, and some consolidation is not a bad idea. I just hope this is where it will stop. Otherwise, the superannuation system will become a one huge joke and a source of business for big industry funds or corporations rather than a real retirement fund that honestly has your benefit at heart. If you enjoyed this video, please give it a thumbs up and subscribe to this channel not to miss my next video. And please visit my website aboutretirement.com.au where you can check even more information about preparation for retirement or how to improve your retirement if you're already there. If you do need an unbiased advice, then please book a meeting with me through my website. We can spend an hour together going over your financial situation, and I'm certain that even that 1 hour will assist you to get clarity how to deal with your savings, your super, your cash flow to improve your overall financial position. And now I would like to invite you to watch those previously mentioned videos. The first 8 changes to super, changes introduced to our superannuation system in 2021-22 financial year that you should know about. The second video is fees you pay in super. Don't just listen to a marketing film that your superannuation fund put on TV or in newsletters if you receive any. Understand how superannuation funds charge for their service and draw your own conclusion, or just simply request for solid, unbiased advice. I will speak with you soon. Bye.